Welcome. We are back. The guys Zeke, AK, Papa Strata, Max, Plebery, Corey, Mr. Robinson. What's up in the chat? Crazy market right now. It's a good time. It's a pretty good time. I really haven't even looked at charts since like last Thursday, so you're gonna see some big updates because I'm also not even completely aware. I've seen the percentage changes going on and stuff, but I haven't looked at a lot of charts. So I'm going to be doing that. You're going to see my live reactions to a lot of this craziness right now. And yeah, I'm sure most of you know probably what's going on, maybe even more than I do. So I'm just kind of catching up right now. But Mr. Robinson is saying that Fisker starts production in 2 days. I'm really excited for that. Fisker just broke out of multiple different things. CLOV broke out. AMC, I think it's almost like a 50% profit swing that I alerted for premium members last week. That's been doing great. GameStop had a good day today. And yeah, let's get started with some crypto and other markets, and then I'll get back into stocks. So let's talk about Bitcoin, which basically broke down from the 17.5K level, and right now it's just consolidating. On my last stream, it was actually right at these lows. It was right in between those two big levels, and I was just talking about how you're in the middle of nowhere, kind of. Your next support's around 14K, resistance is around 17.5K. It pretty much went right up to that resistance, used it as resistance, this previous low from June, and now it's kind of just back down. So still, until this is above or below or at this level, really anywhere in here, it's just hard to get much of a reading on Bitcoin for right now. Ethereum is a little bit different though. It's trying to hang on to this zone over here, this blue zone. It's trying. It really is. I mean, it's still been within this one candle from November 9th for the past week or so, but it's just continuing to test. I'm not sure which way this breaks, but it's just really a patient person's game. We'll see. And then this is a big one, and this is something I've been talking about for a couple weeks now. We talked about the breakdown on the US 10-year, literally right over here, but it decided to back test the breakdown for like 2 weeks, which is unusual to say the least, but it kind of makes sense given like how long it was holding this trend line. It was a very long trend, but you continued to backtest, and then right there at the top you printed a bearish engulfing candle off the supply line, which used to be a demand line, and now you can see you've put in your first lower high in some time. You might even have a little bit of like a harmonic forming over here, but yeah, the trend, at least short term, has shifted with those bearish variables. Longer term, I'd say support is down around 3.5%. We go over to the weekly, kind of have nothing here really, and a little bit of classic bearish divergence on both oscillators. So that's how it's looking. Let's move over to the 10-year. Sorry, crude oil. I'm very tired, so you could probably tell, but crude oil is back testing a breakdown of this demand line. You had some classic bearish divergence playing out. Nothing too much has changed here. It's just continuing to try to hang on to this $85 level over here. So that's pretty much stayed the same. Let's look at energy really quickly, which is, I mean, this is actually just weird. You were testing a breakout of this zone. If you go over on the weekly, this huge level dating back to 2008, you were testing a breakout of it. Then you break down from this rising wedge, classic bearish divergence, and then you gap up and then you break out. So it's like fake breakout, then fake breakdown, then breakout again. We'll see what happens, but this is the highest candle close for the energy sector probably since like 2014. And you're starting to breach that bearish bat PCZ. It's not bad. It's just technicals really didn't play out for the most part. And we have gold, which the technicals have played out beautifully. I talked about the breakout on gold literally as it was happening on this exact little red candle, if you can even see it. And what happened, you broke out and you went right to the next resistance, which was this 1780 level. You're also near the 200-day moving average. So now you're approaching a little bit of resistance, also kind of similar to like a bearish harmonic of some sort over here, even though it's nothing official. And then we have silver, which is continuing to test this resistance, which used to be support, and it's also the 200-day moving average. Bearish engulfing candle was printed today, however. And then the dollar currency index, big dump under this 109 support level. I did not see that until literally right now. So with the dollar currency index breaking down, and then also the 10-year breaking down a while ago, but finally having that breakdown play out, you're starting to see this rally in equities over the past couple of weeks. And this is why I spend time looking at other markets before we even talk about stocks, because looking at these markets can help you understand potential moves that are coming in the market. However, the dollar currency index now just printed a bullish pin bar candle kind of off the 200-day moving average and this 105 support level, close to oversold, so it might be looking for a little bit of a short-term bounce. And then finally the Hang Seng Index, another one we talked about the breakout right as it happened. You broke out, you had your first initial bounce, now you're gapping up again. So you are basically filling this gap from September 22nd. You're at the top of this channel kind of. I mean, you could probably extend it if you really wanted to. And if we go over to the weekly, you are comfortably back above this trend line you've been holding for Chinese stocks for 24 years. So you were under it for a little bit scary, but now you are back above it. And yeah, this was probably close to a bullish butterfly as well. Pretty much a bullish butterfly, like textbook bullish butterfly, actually starting to play out. Somebody might have mentioned this already. I don't know, I feel like the lump mentioned this or something, but textbook bullish butterfly for the most part playing out currently. And yeah, that's pretty insane. So 200 moving average around 20.1K. And then after that resistance at 22.4K. So that's really what's setting up your current market. Let me talk about everything going on here, which is looking a little bit different now. And I'm not trying to, you know, start streaming again and bring bad news, but I'm gonna be very unbiased with what I'm seeing. Let me see if there's anything else in the chat. Chat's not showing on the stream. What's up, Keanu, in the chat? Bar candle, yep, we just talked about that. Okay, so the dollar broke down on the CPI release. I'm trying to fix the chat right now. That should work. If it's not, then it's fine, but let's get started here. Let me actually go over to the Discord first. Links in the description. It's free to join if you have not, and let's get started with next. Wednesday's not here, actually it was changed, but all right. So Wednesday, can't zoom in. All right, Wednesday, I'm not seeing anything much for tomorrow. Thursday, FOMC speakers, jobless claims, so nothing too crazy. And then earnings for the next couple of days, we have NVIDIA tomorrow, which is big. Target tomorrow, Lowe's. You're gonna see some retail stocks reporting, even Macy's and Kohl's and BJ's on Thursday. Bob was on Thursday, Gap is on Thursday, and then Foot Locker and JD. So a lot of retail stocks reporting. I think the big one though is NVIDIA this week. And that's what's going on. Let's talk about the charts now. All right. The S&P 500, it's been rallying very nicely. Where did this all start? This cup and handle. Talked about it. It broke out. It's playing out currently. Good stuff. If we extend this over a little bit though, you can see you're finding some resistance at this inflection zone around 400. It's a psychological level as well. You do have a gap fill around 410, 409 to 410. This whole entire zone really, 405 to 411-ish is the big resistance. This was support in May of 2021, and it was recently resistance over here and over here. And that's also where your 200-day moving average lines up for this SPY. So I would be very surprised if the S&P 500 got above this before dipping first. Alongside that, you also have this supply line, which you can see you've rejected 3 times. So all of that is lining up right in this area over here. So you are going to be, even if you continue to go higher, you have some resistance right above you on the S&P 500. If you go over to the 1 hour, you're just creating a little bit of a range between 394 and 401. It's very neutral, I'd say, short term going into tomorrow. You know, maybe some people look at this as like a head and shoulders, but for the most part, I just view it as this, very simply. All right. So that's all good or not good, but that's really very simple. You have a little bit of classic bearish divergence on the 4-hour. If we go over to the daily, and then we look at the Bollinger Bands, we are hitting the upper Bollinger Band. You've kind of been riding that upper Bollinger Band for a couple days now, so it's not like a big difference, but pretty much every time this year the S&P has had enough steam in it to rally to the upper Bollinger Band, you have pulled back shortly after. However, there was a little change over here. You can see most of the times you hit the upper Bollinger Band, you eventually went back down. Let me just clear all this so it's a little bit more clear. You eventually went to that lower Bollinger Band. So just to make it simple, you can see you hit the upper Bollinger Band there, then you went down to the lower, and this has pretty much been the cycle. Very simple way to view the market this year, just non-stop. It just keeps happening. But there's a very small detail that is interesting to me right now. I'm just charting all of these out. All right, so you have all this upper Bollinger Band to lower just pretty much happening non-stop. However, if we look at this most recent time, you hit the upper Bollinger Band, you dipped down about halfway, and now you're back at it. So you actually are doing something a little bit different. However, again, you're getting the upper Bollinger Band into the 200-day moving average with classic bearish divergence on the 4-hour. I think this indicates potentially a pullback going into the end of the week. Again, we do have this gap fill at 380-ish that also lines up with some support because it was resistance in the beginning of October. So if we're going to be looking at it like this, which is a little bit different than everything else I have originally charted, even though you did break that trend and you did not revisit the lower Bollinger Band, I just feel like you're entering too much resistance on the S&P 500 after a couple good weeks of rallying right now. So I think it could indicate a short-term pullback. But that is still something to note, that you didn't go back down to the lower Bollinger Band on the last touch of the upper Bollinger Band, which is something I wanted to talk about. So this is where we're currently at. Moving over to tech and the Qs, you broke above this resistance here, which was pretty much the dragon pattern breakout. That's playing out. Now you've got resistance between 297 and 303. That's your next area of resistance. It's a pretty strong resistance actually. The 200-day moving average is well above that as well. However, no classic bearish divergence like the S&P 500 has. Moving into small caps, huge test here. This is a big make or break area for the Russell 2000. You can see this 188 level with support over here, resistance over here, resistance over here. And right now you're testing that level again. Also, you're testing a breakout of the 200-day moving average. The SPY and the Qs, the large cap indices, are actually above the 200-day moving average. I mean, they're actually below the 200-day moving average. The Russell 2000 is trying to break above it. However, you do have a little bit of classic bearish divergence on the 4-hour, similar to the SPY. So it really all comes down to this big 188 level for the Russell 2000. Moving on to the ARK ETF, it broke out of this wedge. Somehow, barely, but somehow saved itself. You were pretty much, you had a candle close confirmation as your lowest candle close since probably 2017. It looked like you were breaking down from all of these lows you held the whole entire year, and then boom, this market rally came in. That ended up just being a fake out. Now you've kind of broken out of this wedge. You have your two bottoms in. It's still not like everything is okay, but this is a good start. You're at least holding your last major support for the ARK ETF. So I think it's something to be happy about for right now. If we go down to lower time frames, you are kind of back at this supply line of this ascending broadening wedge, and then we can also look at some resistance. Let me make it a zone here as well. So this just kind of lines up with what I was talking about in the S&P 500. Yes, you did get the larger breakout, which is nice, but now you're pretty much approaching short-term resistance. And I think that's the main point I want to talk about on tonight's stream. You're entering some short-term resistance. I do think a pullback the next couple of days is something that I wouldn't say is likely, but is what a lot of technicals are indicating right now. If we look at the VIX as well, it has been constantly going down, but it's starting to create a little bit of a down-sloping channel. We go down to the 4-hour chart and actually extend this over here, and you can see it's starting to curl up a bit. So you're going to be testing a breakout, or you're kind of already close to testing a breakout, and you did end up bouncing off this 22.5 level, which was your lows in September, or on September 9th. So same thing here. This could be a high or low even if you do reverse here. All of this is pretty much as well close to a bullish bat. I think you're not deep enough, however. you're about a 786 retrace. So if it were to have dropped a little bit more, maybe fill this gap over here like 21, you could have had the bullish bat, and maybe you get a short-term rally off of this breakout and then you just drop again. So maybe even something like this is possible. You get your short-term rally on the VIX, which means the market pulls back a little bit, and then market starts bouncing up, and then after that, that's not what I meant to do. And then after that, the VIX drops down. It's at that PCZ. Again, this is all complete speculation right now. I'm just trying to have some fun with potential scenarios. And then the market goes up after pulling back. The VIX drops down. Then you hit the bat PCZ. Things like that are always possible where both things happen. But really all we're worried about as traders is the next thing that happens. So we'll just focus on that for the most part. And that's my thoughts on the market. It's been a nice rally, but short term, I think there are some indicators for a pullback really somewhere in here, maybe down to back test this zone breakout around 390-ish, 380. You also have some other previous levels, as you can see right over here. So into these areas could be a zone that pulling back into wouldn't be crazy for. And that's my guy in the chat saying pull back and then Santa rally. That would be, I'm not going to say optimal, but from what how I've been reading things lately, I think that would make the most sense, because I have been talking about that Santa rally for a while now, and we're getting a rally, but Santa's not here. It's a little bit too early for the Santa Claus rally. I'm not complaining about it. I'm not complaining about rallying right now, but I want the December time streams where everything's just a great time. So I wouldn't mind if we pulled back first and then we went up a little bit later, but I'll take it. All right, so let's move on to some individual names now. We're going to start off with Fisker. Someone put in the chat earlier, production starts in 2 days. And after almost getting stopped out, you can see how close it was to the bottom of this red zone. After this swing trade that I alerted almost got stopped out, Fisker is now back in profit. It held the all-time lows. Currently, the swing is up 9% since the alert. Today, it actually hit its highest price during the swing. And you got above the huge zone. These lows over here, these highs over here. You're now back above it. Yesterday was your highest candle close since September 19th. On the 4 hour, you can see this wedge breakout. Very nice stuff taking place over here. The inverse head and shoulders really didn't do much. I would probably say it's turned into more of a double bottom than anything. And if we go back over to the daily, you can see that breakout again. So high short interest, production starting, wedge breakout, zone breakout. I think there's room here. But again, that market pullback could maybe at least give it a back test or something like that first if we do get that. So we also have CLOV, which broke out of this descending broadening wedge. I've said this multiple times this year, and I'm going to keep saying it with CLOV. Just breaking out for CLOV has just simply not been enough. So I'm not trying to act like this is a big deal. It's not. It's done this a bunch of times and nothing has happened. I'm just mentioning the fact that it's doing this right now. Even on the 1 hour, it broke out of this descending broadening wedge, and that's already kind of played out for the most part. So it's a nice little start, but it's really hard to have high hopes until we see more price action that's not depressing, to be honest. But that is CLOV. AMC, I alerted this as a swing trade to premium members literally last week. If you're interested in stuff like that, here you can see that's a new one. Maybe you zoom in and you get a little hint, but AMC 11/10 last week. Alerted this, you could see it was down over here inside the wedge, and now you can see it is very clearly outside of the wedge. 2 out of the 3 targets have already hit. At the highs yesterday, this swing was up almost 50%. So very nice move. And how did I come about alerting this swing trade to premium members? Well, you were breaking out of the wedge. You had classic bullish divergence. If we really zoom out over here, you can see this zone. It was the lows over here, highs over here. This was very clearly a very important zone. And as soon as I saw AMC starting to bounce off of it, right over here, I put out an alert. And so far it's been pretty good. The third target I put was 857. Honestly, like, I have no clue what happens, but even after that, you have 930-ish, the 200-day moving average, and then above that is when it gets crazy, because you break that and then like 1270 is like the next big level, because a couple of these highs and lows from the past, as you can see over here. So AMC's been doing well as well. And GameStop, AMC's brother, is retesting a breakout of this very weird range it's been in, as you can see over here. Let's go down to lower time frames, even lower time frames. So the last time GameStop broke above this zone level, I actually also alerted calls to premium members like right over here, and they ran 500% like the next day. So right now, I'm just saying it again. I said this the last time when we were over here. I'm just saying it again. It got above 28, and literally this is what happened. This is a very important level for GameStop for whatever reason. And right now it's testing a break of that again. It's not above it for right now. You could even maybe draw this, and it's kind of simultaneously testing a breakdown. So just keeping an eye on this for tomorrow. Does this break down from this rising wedge and reject the resistance, or break above? Probably one of the two will happen tomorrow, so that's something I will be keeping an eye on. And let's look at some large caps now. We're going to start off with Apple, which is somehow, I actually thought it would break it, is somehow holding this zone, continuing to be a market leader overall. And you are approaching again some short-term resistance, but holding these lows yet again. Look at all these highs and lows over here at this mid 130 area. It's doing a great job of holding it. It's doing a very good job of holding it. Probably better than, definitely better than I expected. So as long as you stay above it, it's actually fine, but I didn't even think it would, to be honest. And then we have Amazon, which got close to this $83 level. It's support back from 2019. Got to bounce off of that. You're now testing some resistance, which used to be support around 103. If you get above that, you got a gap fill at 109, almost 110. And if you can, you got a gap fill to the downside at 89. Tesla is bear flagging a little bit after breaking under the $200 level. So maybe a little bit of a bear flag going up here. However, you do have classic bullish divergence. Interesting. But if we go over to the weekly, it looks ugly. Just the whole entire formation, longer term, it just looks like a massive head and shoulders. Shorter term, we did just talk about that classic bullish divergence. You also have the potential for classic bullish divergence on the weekly. You also printed a bullish hammer candle last week. So short term, there are some variables. I guess you also got oversold at the lows. You're getting this bounce right now. Maybe it goes a little bit longer. But that could just drop you or lead you back up to back tests and then drop you again later on. So we'll see. Microsoft. This one was interesting. I don't know if I shared this on stream or in a watch list, but I charted this wedge about a week ago. Microsoft broke out of it with classic bullish divergence, reversed pretty much right off of this 213 support level. So you did get that breakout, but just like a lot of other stocks in the overall market, you're very quickly approaching some resistance. So it's something you want to keep in mind for the next couple of days. Then we have Google, which is just bouncing up right now. I mean, there's really not a lot to talk about on this chart. It's kind of confusing. The weekly does tell a different story though. You had this wedge over here. You probably made around a 618 retrace. A little bit deeper, but you made pretty steep retrace. You've got classic bullish divergence. You did have a bullish or close to a bullish engulfing candle last week. So nothing bad really. Longer term, I think these are strong moves, but short term, we're running into resistance, and that hasn't gone well for the market this year. So we'll see what happens. And then yeah, Meta. What is Meta? Right over here. Very nice bounce. It's got resistance at 123. As you can see, this was a support level back in 2018. This was also your lows from October 13th. So it's been a great rally off the lows, kind of like straight up. Another stock though approaching some short-term resistance. We go over to the weekly on this one. That larger wedge I drew on stream, I think last week, you bounced right off that demand line. So it's going to be a key test, because if we draw a little bit of a zone over here, like this, we draw that zone out, you can see at the same time you're going to be testing this blue zone, you're also going to be testing this supply line. So this area in general, 120-ish is going to be some resistance for Meta most likely. Those are your large caps. I'm like losing my voice right now, but I just wanted to do a quick update stream to see how things are looking, so I'm not like running all over the place. Tomorrow I want to do a longer stream. I just needed to see how these charts are looking, so you're just seeing my live reactions to them right now. I know Disney sold off on earnings, but it is now back above the $91 support level. We got classic bullish divergence, and it's back in this zone. So I think the price action is healthy overall. This rally looks different than most of the bear market rallies, but I still think short-term pullback technicals are being indicated. So that's just what I'm seeing right now. And let me scroll up a little bit. The chat's still not working. I'm not sure why. About CLOV, I heard Bank of America increased position by 27%. I did not hear about that. If that's true, that is interesting. I mean, it's at $1, and so it's $1.47. And Zeke saying that good to have you back. Thank you, Zeke. All right, so quick update stream. For the most part, that's what I wanted to say. We can do a few ticker requests if anybody has any, and then I'll get out of here. If not, I'll just end it now. But if you want me to take a look at a stock, I know it's been a few days, drop that in the chat right now and I will do so. And I don't know why it's not showing up on the stream. I really don't know how to fix it. It would have worked by now. Alright, so Palantir. Clown to wrapped ETH is actually banned on this stream, by the way. TLRY is, oh no, sorry, Palantir. Look at that, right off the pattern completion zone of this bullish shark. You got a MACD crossover today as well, so that's good. Going over to the 4-hour. This is kind of a range between like 715 and 860, so you're towards the top of this range. Also potential hidden bearish divergence. Like again, the rally is nice. You had a larger pattern that's playing out right now. It's just shorter term. Resistance is kind of across the board. Just everything just running up into resistance at the same time. And then NVDA. This was a premium swing recently alerted as well. It has hit 2 out of the 3 targets. Currently it's up 27% since the alert. This one's pretty much gone straight up. The hidden bearish divergence so far has not done anything. Earnings again tomorrow, so that's going to be an important thing to look out for. And then around 180-ish is where you have resistance. It's these 2 highs, a couple of other highs, and then also your 200-day moving average. Goldman Sachs is filling a gap right now, like the beginning of the year. Very good reversal. This has been a rough year for a lot of banks, but you can see the last month, I mean, you've pretty much regained, I mean, let's see. In the last month, you've regained probably about like 75% of the losses over the past year in Goldman Sachs. So that's a pretty good month. If you're taking back pretty much a year of losses in a month, that is something to keep in mind. And all of that pretty much started right off the earnings as well. So that must have been a nice report. And I think the big zone to stay above is what I'm drawing out right now, 348 to 358. And if you can break above this gap fill, then your next resistance is 412. TLRY, it's been running off 270-ish. Right now, it's testing this 440 level, which was your highs from August. And it's also your 200-day moving average. And it was also your lows in September of 2020. So this is a huge level. If that breaks, then 481 is your next level. You do have like some shorter term support, like literally right under you, which I guess you're back testing like right now. And then if that breaks, then that becomes an issue. But yeah, you probably want to stay above 4. And we did already look at the VIX earlier, Darwin, so it'll be in the timestamps. Now we have FLNG. This is pretty much just a triangle pattern right now. It's not broken out in either direction. So I'd say these are the bigger levels and that's your pattern. Really it. And then finally, Upstart. Pretty close. I mean, there's a couple different ways you could chart this, but I would say it's wedging right now. Kind of like that. I think it's close to a breakout. I think getting above 22, I mean, there's no way to say it's close to breakout. It could be close to breakout. Getting above 2250 would be big. There's a lot of these formations right now where you're testing a supply line and a horizontal level at the same time. I think Microsoft, or no, was it Microsoft? It was one of the tech stocks. It might have been Google on the weekly. Let me see if I can find this. I mean, yeah, Google on the weekly is kind of an example, but a lot of these stocks are now, even on larger time frames, they're approaching areas where they have supply line resistance and horizontal resistance. So it's like a double resistance. Even the SPY has some. We talked about that earlier. But Upstart does have some resistance in this area. Breaking above that, then you got like 25.70 next. A gap fill at 31 pretty much. Those are your next levels if you can break out. NEM. Had this little zone over here between 40 and 45. It looks like it gapped above it and then it back tested it today. It flipped this resistance or the previous top of the zone into support. You do have a gap fill at 44.26 though, and an upside gap fill around $51 and then resistance at 53. So like if you keep rallying, this whole entire blue zone is going to be very, very big resistance. And it looks like what set this up was a descending broadening wedge with a partial decline. Very textbook stuff. Alright, so that's going to do it for tonight. If you haven't seen it by now, I'm very, very tired, so I'm going to sleep. Thank you for watching the stream. I hope that you enjoyed the update stream. I should be live tomorrow night and do a longer stream. Hit the like button, hit the subscribe button, join the Discord. If you want to join Premium, you can do that. If not, that's cool. Sure, I see a compliment in the chat, so I'll talk about that and pat myself on the back. But Darwin will say, definitely will say from experience. I know how tough this time of the year is for college things. Thank you, Darwin. I appreciate it. And I'll see you all tomorrow night. Peace out.